Hello, this is Todd Hubbs, agricultural economist at the University of Illinois. Today I'm talking about my weekly outlook from July 15, 2019. Corn prices heating up. Last week we saw December futures prices for corn close at levels we hadn't seen since the June Acreage report, which was pleasantly surprising. This is despite a somewhat bearish WASDE report that lowered corn exports 100 million bushels and overall raised carryout for the 2018-19 marketing year to 2.34 billion bushels. There's little doubt the uncertainty regarding corn acreage and yield this year has put supply in the picture, and despite the bearishness we saw in the WASDE report, I think we might see a nice little weather premium move into corn prices as we move through July and into August. Today I'm going to specifically speak about the supply situation and how I see maybe prices going for the rest of the marketing year 2019-20. When we're thinking about 2019 supply, the first place we need to look is corn yield. Currently, USDA is projecting national corn yield at 166 bushels an acre. I think a lot of people are fading that yield a little bit. We'll see as we move through the summer. Right now in the U.S., good to excellent ratings for corn, as can be seen in the top part of this slide, are about 57%. I think these might deteriorate a little bit as we move through July. It's hard to say at this point, particularly if we don't know the precipitation levels in the Eastern Corn Belt. Speaking of the Eastern Corn Belt, places like Illinois, Indiana, Ohio are below 40% good to excellent ratings on a late crop and some pretty hot weather. We're looking at 90 plus degree temperatures over the next week throughout most of the Corn Belt, with particularly punishing temperatures in Iowa. We'll see how the crop turns out. But right now, I think there's a little bit of bullish momentum in yield for corn as we move through July and into August, and I expect the weather premium to be put in place and stay there for a while over the near term. The other component of supply is corn acreage. The USDA came out in the June acreage report at 91.7 million acres of corn, up 2.6 million acres from 2018. I think a lot of market observers are fading this acreage a little bit. I think in general you see between 86 and 88 million acres as an expectation. It's really hard to wrap your mind around what the corn acreage truly is this year. When we look at Illinois, they picked 11 million acres, the same as last year, got planted in Illinois. 5.5 million acres in Indiana, up from last year, and 3.3 in Ohio, down slightly from last year. The delayed planting and the amount of prevent plant acreage that went in those three states, it sort of boggles the mind to think that we either hit last year's acreage or in some cases exceeded it for corn acreage this year. The way I'm sort of thinking about it, I think there's a lot more prevent plant that got tied into the June acreage report, and as we resurvey and as the USDA re-interviews people, it may come out in the August crop production report. I'm sort of leaning toward less than 86 million acres of corn planted. I'm in the 85.2 million acre range. That could be wrong because the uncertainty is high. The way I sort of look at it is if 91.7 million acres is right, it seems like getting a 166 yield is a bit of a stretch based on the kind of conditions the corn went in and the kind of weather we've seen thus far. So we're looking at a supply decrease, just how big, what kind of result we're going to see either acreage-wise in the August crop production report or how yield's going to be reflected as we move through the summer. So when we're thinking about the balance sheet for 2018-19 and 2019-20, what I've got here is the USDA's current forecast and then some forecasts that I produced based on my thinking. I'm pretty much with USDA. We saw in the 2018-19 marketing year, we saw them lower exports by 100 million bushels. It might be overdone, but it's going to be pretty close to that. We saw a reduction in feed, seed, and industrial uses, and they readjusted feed and residual based on the June 1st stocks report. We're looking at carrying out 2.34 billion bushels. When you include that with the really large crops we've seen in South America, it's about almost 6 billion bushels in Brazil and Argentina, up about 1.5 billion bushels over last year, with Brazil and Argentina exports forecast to be about 2.75 billion bushels, which is 881 million bushels more than last year. When we think about the world market, Brazil and Argentina look well positioned to take any kind of exports that we don't have, particularly if we see the crop come up short We maybe even see some of that move into the U.S. and the Southeast. Right now, the USDA in the third column has the acreage saw in June. Of course, they're re-interviewing, and a 166. And they've got their consumption numbers right there. I've done a projection based on my 85.2 and a little bit of expanded gap between planted and harvested acreage. I think we could see some serious failed acres this year. It's hard to say at this point, but I think it could be a little bit higher than the normal and a little bit higher than the current 8.1 million acres USDA is putting out there. Let's say the 166 is right. That puts us at about a 12.7 billion production total, with a total supply of about 15.15 billion bushels, or 1.4 billion bushels lower than last year, which would put us on par with what we saw from 2011 to 2012, if true. Also, if true, I think you'll see a little bit of rationing if we get that kind of scenario, because I'm thinking corn prices will be around $5. We could see imports kick up a little bit. Exports, where we always see the rationing start, grind down a little bit of less out of ethanol, particularly in the Eastern Corn Belt, because we've seen some pretty strong basis, particularly at ethanol plants in the Eastern Corn Belt, on local supply issues, and I think this might continue as we move into the fall and in the early spring of 2020. I've got a more dramatic supply reduction if we think my acreage number's right, 85.2, and we do a 160 yield. We're looking at a 12.3 billion bushel supply, and I think we'd see pretty stark rationing under that kind of scenario, particularly in the export market, a little bit more in ethanol, and maybe some in feed and residual. I sort of see between 5 and 550 with the cash price there as being a place where rationing would really kick in. When we talk about a kind of yield loss and acreage loss that I'm presenting in the last column, prices can get non-linear pretty quick in that kind of scenario, which makes forecasting pretty hard. Now, having said all that, if the acreage number is right or is just slightly down and we do hit that yield, that $3.70 to $4 price is probably where we're going to be for corn in 2019-20. Right now we see basis about +5 to +10 on fall delivery. If we get a short crop, you should see that strengthen significantly as we move into February, March of 2020 and out into the summer months, because we're going to be short corn in a pretty big way. Overall, it looks like we're going to have somewhat of a short corn crop in 2019. The uncertainty is really high on acreage and yield at this point. The sort of the way I see it, if the acreage number the USDA presented is right, it seems hard to believe that yield number is going to be right. So we may be heading in the same direction. But if we somehow get the acreage and yield number, if we see $5 corn prices right now on old crop corn for July delivery, you may want to think about pricing those, or even pricing some new crop corn. But there is the potential out there for a really strong and bullish price scenario for the 1920 marketing year, similar to what we saw in the 2012-2013 marketing year. But the uncertainty is still very large, and you need to take that into account when you're thinking about your marketing. Well, I'd like to thank you for your time. You can find my weekly outlook and daily analysis of issues related to Corn Belt farm economics at farm.daily.illinois.edu. I look forward to seeing you around the state of Illinois.